Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we are following in the BNN Bloomberg newsroom. Shares of Northwest are falling today. That's after revenue for the grocery chain decreased from last year, weighed down by a drop in sales in its Canadian and international operations. Sales from new stores also impacted the quarter. On the upside, Northwest posted profit that beat estimates driven by margin improvements. Shares of Roots are under pressure in today's trading. The Canadian retail company posted profit in its latest quarter that came in below Bay Street estimates. Roots says the decline was due to adjustments tied to employee share-based payments. On the upside, the company saw a nearly 7% jump in revenue in the quarter, boosted by same-store sales and direct-to-consumer sales. And we are watching shares of Apollo Global Management and Capital Power today. The companies have struck a deal to pursue acquisitions of gas-fired power plants in the U.S. Both sides will commit as much as $3 billion U.S. in combined Capital Power has been focused on adding new projects in the U.S. and says the deal will accelerate those plans. Capital Power also announced it has signed an electricity supply agreement with a data center developer in Alberta. And taking a look at the markets right now, the TSX back in the green. It's up by about 0.17%. South of the border, the U.S. markets are a little bit mixed. Up ever so slightly for the S&P 500. Dow Jones up by nearly a half point, and the NASDAQ is off by 0.2. The Bank of Canada kept its overnight lending rate at 2.25%. For more now, we are joined by BNN Bloomberg's Lindsay Biscaya on this. Lindsay, thanks for joining us. No real surprise on that one.
No real surprise. This is, as you know, Roger, as well, what most economists were expecting is to keep that rate the same at 2.25%. And we heard from the governor of the Bank of Canada, Tiff Macklem, today, kind of giving some of his reasoning and what the Bank of Canada was looking into to come to this decision to keep rates steady. Obviously, Macklem hinted that this was going to happen back in October, but he did say at the time we'd have to see what's happening with the economy, what the outlook looks like, and the Bank of Canada would adapt accordingly. Three main points that Macklem really wants to hone in on today is the fact that tariffs have been affecting certain sectors really hard. You think about steel, aluminum, auto, lumber. Those are some of the sectors that have really been hit hard by tariffs. Businesses that rely on those sectors have been hit hard as well. But despite that, Macklem saying he feels Canada's economy is quite resilient in the face of the ongoing trade dispute with the U.S. The rate of inflation is close to 2%, and Macklem says he feels it's going to stay there. That's the second point. And then the third point that Macklem kind of was trying to drive home today is the fact that keeping this policy rate steady will help to keep inflation at about 2%. Now, there was a lot of talk today about inflation returning to its target, but Macklem was answering questions from reporters, and he got one good question from a reporter that was talking about the fact that most Canadians aren't really focused in on the rate of inflation. What they're really focused on, what they see in their day-to-day lives, is the cost of things and whether Canada and Canadians can see more affordability in their future. Here's what Macklem had to say in response to that.
We're not going to lower prices overall. That's not how, if we were to try to push the whole price level down, that would cause a severe recession in Canada. Nobody wants that. So we're not going to become, things are not going to become affordable by lowering prices overall. The other element, we need to keep inflation low. The other element to improving affordability is to grow income. And how do we grow income? Well, we need to improve our productivity. We need to invest more. We need to diversify our trade. That's what's going to grow income. With more income, then everything becomes more affordable.
Now, Macklem was also talking a lot about the federal budget. Of course, Prime Minister Mark Carney's first federal budget that was announced last month. He was focusing on the spending we're expecting to see coming out of that budget over the next couple of years, talking about how that factored into the decision, too, that could hopefully boost Canada's economy. He said the labor market is showing signs of improvement, but he did say they see muted hiring intentions ahead due to uncertainty with this trade war, particularly in those tariffs I mentioned off the top that have been hit quite hard. So the Bank of Canada obviously going to be watching that closely in 2026. That's according to Macklem.
And just before we go, what did you have to say about the fourth quarter?
Yeah, so the fourth quarter, the Bank of Canada saying that it looks as though it might be a little weak. Uncertainty remains high at this time. Macklem says the range of possibilities is wider than ever. They do expect a further swing in trade in the fourth quarter, and so they expect that quarter to be weak. And Macklem said once again they will adjust based on what they see. And then, of course, all eyes are on these negotiations, these trade negotiations in the new year, particularly the renegotiation of the free trade agreement, CUSMA, between Canada, the U.S. and Mexico. That's set to start in 2026. And Macklem did note that a lot of Canadian businesses and the future of these businesses hang in the balance when it comes to renegotiating this free trade agreement and having that still in place in the new year.
Okay, Lindsay, thank you for that.
Thanks.
BNN Bloomberg's Lindsay Biscaya. Now, for more reaction to the BOC rate decision, we'll have Andrew DeCapua, principal economist at the Canadian Chamber of Commerce, join us after this. Amid the adverse impact of Donald Trump's tariffs on the Canadian economy and the uncertain future of the North American Free Trade Agreement, CUSMA, the Bank of Canada has decided to hold rates steady at 2.25%. For more on the impact of this decision, we are joined now by Andrew DeCapua, principal economist at the Canadian Chamber of Commerce. Andrew, thank you very much for joining us.
Yeah, great to be here, Roger. Thanks.
We pretty much knew this was coming. I guess what we wanted to hear what he had to say and what stood out for you from Tiff Macklem.
Yeah, so I mean, the way I would sum up today's decision, which was, of course, expected by markets, and we were expecting the Bank of Canada to hold rates at 2.25%. But the key thing here is, the governor struck a pretty dovish tone on the economy, but not so much on rates. And when asked by reporters on how the recent stream of positive economic data, and on top of that, the positive upward revisions to the national accounts data from 2022 to 2024, how that has changed the bank's thinking in terms of the strength of the Canadian economy. The governor pretty much downplayed that in terms of its overall positive effect. He continues to talk about the high degree of uncertainty, mostly related to tariffs, and that's lingering impact on trade exposed sectors and its potential spillovers over into the new year. So we'll have to wait till their updated forecast in January, and I think he was buying some time with those remarks.
What's your worry with that almost juxtaposition?
Yeah, well, I think I think at the end of the day, the updated forecast will give us a sense as to how they're seeing this incoming data affect the economy. The governor continues to say that, listen, the trade impact is a structural impact on the economy. Rates can only do so much. And you saw reporters push today on, what about affordability? What about the large degree of mortgages that are going to renew over in the new year at higher rates? And so the governor is trying to, I think, just manage expectations. He'll do this at different points in the year where he'll try to sort of abdicate a little bit of responsibility and sit and wait to see how the information comes in. I think we're going to see a little bit of hotter inflation coming out of the last few months of the year. You'll recall we had a GST holiday last year. We're going to see some upward pressure on food prices. The banks said they're going to look through that. And they're looking through, positive economic data. So I think it's really, it's mixed signals here with the bank. They're going to want to sit redo their forecast, and then take it from there. But, our view is that rates are really going to be sitting tight for the foreseeable future.
Now, there had been talk there might be a rate hike, but it sounds like that, with the way you described it there, we can't see that happening necessarily.
No, I mean, it's definitely something that's on the table, right? If the economy gains steam, we saw a very strong third quarter. That was mostly due to just the mechanics of having a positive net trade and imports falling off the cliff there. So, and those are subject to revision. So the governor kind of mentioned that, right? Mm-hmm. Final domestic demand, we have seen strong points in time of seeing that in the year, but that was flat in the third quarter. So we should see a pickup in that in the fourth quarter. But again, it's just been very choppy. And so, the governor is not even thinking about rate hikes until there's just this really strong momentum on the domestic front.
And it did seem a little bit like they were almost caught off guard by some of the numbers that they did see, unemployment, the GDP. And it almost like they weren't expecting that, which I would have thought they might have been factoring that in a little more than they did.
Yeah, I think like everybody, and especially like economists, we're looking at the data with a little bit of awe here, right? We're seeing the labor market hold up quite remarkably in terms of just looking at the labor force numbers. But then again, you look at the payroll numbers, and especially it paints a completely different picture. Especially when you look at manufacturing, a sector that's been hit by the trade war, right? It's pretty much flat when it comes to job creation this year in the labor force survey, but in the payroll survey, it's still declining significantly. So I think it's, again, there's just so many mixed signals at this point, and they're going to want to rerun the numbers to get a better sense of how things are going to pan out next year. Don't forget, we do have significant risks upcoming in the new year. We have population growth that has just completely halted the mortgage renewals, as I mentioned, and we have very high expectations, for investment picking up in this country that I don't think the bank is convinced of as well.
And how much of a factor going into the next year is CUSMA, if it's, say they resolve it, we strike a deal, how much of a factor would that be in all this?
Well, it's a main factor. I mean, at the end of the day, the reason why the Canadian economy has been so resilient is because close to 90% of our trade, our exports to the United States, have been protected under the agreement. Absent of that, we would be in very significant economic, territory. We used the R word in the meeting there, the governor this morning. It's not recession, it's resilience. And it's in large part due to that protection under the trade agreement. So it is going to be front and center for Canadian businesses heading into the new year. But we also need to focus on the domestic part of the economy, things that are driven not by foreign demand, but by domestic demand. And so that's creating conditions for success, for investment, and affordability. And the governor kind of, punted, those responsibilities a little bit over to the federal government, as well as signaling to Canadians, like, don't wait for rates to be that much lower, because that can be self-fulfilling, of course, if Canadians sort of pull back on spending as a result of high degrees of uncertainty.
Okay, Andrew, we have to leave it there, but thank you very much for joining us.
Yeah, thanks, Roger. Take care.
Andrew DeCapua is principal economist at the Canadian Chamber of Commerce. Kirsten Hillman, Canada's ambassador to the U.S., will be stepping down in the new year. We'll have more on that after the break. Canada's ambassador to the U.S., Kirsten Hillman, is stepping down in the new year as the country's top diplomat in Washington. We got more from Diamond Eisinger, the independent consultant and the former special advisor on Canada-U.S. relations in the Canadian Prime Minister's office.
We've been really privileged to have the service of Ambassador Hillman for the last many years, certainly in her career as a civil servant, working at Global Affairs Canada, responsible for trade negotiation, followed by her role as Deputy Ambassador at the Embassy in Washington, and then ascending to her most recent role as Ambassador. So they are going to be very challenging shoes to fill, and it will be certainly interesting to see how the government chooses to proceed.
Indeed, this is an important time. We have the CUSMA negotiations coming up, and she was one of the faces, really, of Canada for them.
Yeah, she has been at different points a driving force behind NAFTA, CUSMA. Certainly in 2017 and 2018, she played a very active role in offering some expertise to the government of that time. She was also appointed to her senior role at Global Affairs Canada under the then Harper government, and has received a lot of praise from across the board and across political lines for her performance in the roles that she's taken on. One of the things that she's uniquely brought to the table is that lengthy career in trade negotiation, in being a trained lawyer, for example, that are skills that you don't always necessarily see in these appointments, that are often, especially in destinations like Washington, used as political appointments, as opportunities to find representatives that have additional skills to bring to the table.
And who would be the next replacement? We've heard talk of Mark Wiseman, but what will be the key assets that this person has to bring to that position?
Yeah, it'd be unwise to suggest who the exact person should be, or rather who the government will end up selecting. We've heard from the Prime Minister today that things are still in the works, and we'll believe it when a final announcement is made of who. But a balance of skills and experience is ideal, particularly the ability to engage a pretty diverse cross-section of Canadian stakeholders. That's a major part of the role, not just from the business community, but from civil society, labor leaders, others, to make sure that their interests and concerns are represented in talks with the U.S., not just about CUSMA, but about a whole range of topics that we have in common between our two countries. You also need to have the ability to establish and maintain a great relationship with your American counterparts, to deal with the many day-to-day issues that again arise as part of your posting in Washington, and then as well have a great rapport with the team back in Ottawa. The role of ambassador is, I think, most effective when that individual has the trust, the respect, the autonomy to proceed in the ways that they need to get their role done, and to have the access in reverse when issues are emerging in the U.S. to have conversations, for example, with the Canadian Prime Minister or with their team. So all of those factors will be balanced going forward as the government decides who they are going to make our new representative sometime in the new year.
I know you don't want to name names, but do you see this staying internal, or do you see them looking outside for the next person, the next ambassador?
Yeah, it's hard to say based on the commentary, as you've alluded to. I mean, there's some suggestion that it could be, for example, someone like Mark Wiseman or someone from the business community. I think that would be consistent, certainly, with the view that this government has taken of wanting to attract, for example, further investment to Canada, to bolster our relationships with businesses in Canada and all around the world. One of the challenges, though, too, is having someone come into this role who, again, has that breadth of understanding from all of the different facets of the role. It is a very complex one, but every ambassador will also shape their position in the way that makes sense for them and their skills. At different points, we may be better served, for example, to have someone who's a real technical expert. At other times, someone who's great at relationship building. So all those pieces can be balanced as government chooses who the next representative will be.
And of course, the relationship with the president is always interesting, shall we say. That would require a special skill set.
Yeah, absolutely. Although the ambassador themselves, I mean, they are responsible for the general management of the relationship between the two countries, certainly at times dealing with cabinet secretaries or senior administration officials. I don't think it's so essential, for example, that the ambassador have the ability to hold a relationship with the U.S. president. That is typically a responsibility that would be taken on by our Canadian Prime Minister as counterparts, as equals at a table or in conversation. So as long as they have a good handhold on the overall objectives at hand, they have that trust and that rapport in all directions. Ambassador Hillman has been tremendously effective in her role, and also in receiving that sort of respect and praise from all sorts of corners of Canada and the U.S. who have really enjoyed working with her. So the next person will have certainly large shoes to fill.
And where do you see the ambassador ending up with her incredible accomplishments and the accolades for her? What do you think is next for her?
Anyone would be lucky to have Ambassador Hillman in some capacity working with them. I believe from her statement that she made yesterday, she's alluded to her willingness and ability to remain available to government as needed. For example, in advisory capacity, government would be very smart and savvy to take advantage of that offer. We, especially just given the so many ups and downs and ebbs and flows of the last decade, particularly in the Canada-US or Canada-Trump relationship, she has a lot of institutional knowledge of how different pieces have unfolded at different times. And so I certainly remain hopeful that she will be connected to government in some way. But who knows, perhaps serving on some boards, perhaps taking on some corporate leadership opportunities. Only time will tell.
Diamond Eisinger is an independent consultant and the former special advisor on Canada-U.S. relations in the Prime Minister's office. Well, the Conservatives' last opportunity of the year to force a vote on an issue they deem pressing ended in defeat today. Their motion supporting the construction of new pipelines failed to pass. CTV's Rachel Aiello has more.
The Conservatives' last opportunity of the year to force a vote on an issue they deem pressing ended in defeat today. Their motion supporting the construction of new pipelines failed to pass.
Yeas pour 139, 149. Nays contre 196, 196.
Despite the wording coming right from the Prime Minister's Memorandum of Understanding with Alberta.
But if he's going to vote against his own words, how can Canadians ever believe his words?
The Liberals said they couldn't support it because, in their view, the motion cherry-picked pieces of the MOU.
It's a no vote against the Conservatives playing games and creating optics and wasting parliamentary time when they should be voting on things that are way more important.
Even a Hail Mary Conservative offer to update the wording
In order to include the things that Liberals claim we left out.
Wasn't enough, as Poilievre still omitted any mention of Alberta agreeing to industrial carbon pricing or reducing methane emissions.
Two things that the Premier of Alberta acknowledged, signed wholeheartedly as part of a complete meal.
And while the vote had no real impact, coastal First Nations came to the capital to remind MPs about the real people behind the politics.
This is our home, and any of these conversations happening out here in Ottawa without us being part of it, we take it very seriously.
The Liberals weren't alone in rejecting the Conservative motion. New Democrats, the Bloc Québécois, and the Greens also voted against.
And that was CTV's Rachel Aiello reporting there. And we're heading into a break, but coming up next, we'll have the latest on prairie tech. Yeah, we're talking tech on the prairies with Selena Philpott, the Connexus Credit Union CEO. That's up next. The Bank of Canada has left its benchmark interest rate unchanged. The central bank says tariffs have done damage, but the Canadian economy remains resilient. Governor Tiff Macklem says policymakers are comfortable with the near-term outlook for the economy, adding that recent data hasn't changed the outlook for 2026 when it comes to GDP and inflation. Macklem warns, however, the economy will need time to adjust.
Looking ahead to the fourth quarter, we actually think final domestic demand will pick up a bit, but we expect to see a further swing in trade. So we're expecting Q4 to be weak. The resilience we're seeing in the Canadian economy is welcome news, but it hasn't really changed our view. We still think the economy is in excess supply. We still think growth will be modest because the economy is working through a structural transition. That's going to take time. And so, we still see that slack being taken up pretty slowly.
Shares of Cineplex are down despite its latest report. Canada's leading entertainment and media company reported box office revenues of $43 million for November. Releases like Predator, Badlands, Wicked for Good, and Zootopia 2 helped drive results, with each film delivering significant financial returns. Cineplex president and CEO expects upcoming films like Avatar, Fire and Ash to follow suit. We are watching shares of Apollo Global Management and Capital Power today. The companies have struck a deal to pursue acquisitions of gas-fired power plants in the U.S. Both sides will commit as much as $3 billion U.S. in combined equity. Capital Power has been focused on adding new projects in the U.S. and says the deal will accelerate those plans. It also announced it has signed an electricity supply agreement with a data center developer in Alberta. Let's take a look at the markets right now, and the TSX in the green again. It's up by about 0.15%. South of the border, it's a bit of a mix. Almost it's a wash for the S&P 500. The Dow is up by 0.43, and the Nasdaq is off by 0.37. Connexus Venture Capital is an emerging name in the Prairies tech scene, initially investing in 17 Prairies-based startups, and it's raised about $30 million for its fund. Here to talk about its latest moves is the CEO, Selena Philpott. Selena, thank you very much for joining us.
Thank you very much for having me today.
Are you surprised by the fact that fund number 2 is oversubscribed?
No, I'm not. We realized back in 2019 there was a real lack of investment funds available for tech startup on the prairies, and Connexus made the bold move to fill that space. And we're seeing that desire to ensure that we support early startup tech companies is still very strong in our province.
And what's garnering this interest with the prairies in Saskatchewan?
I think within the prairies itself is just understanding that we have to create the opportunities that we need in order to fuel economic growth within our province. So as a large credit union in Saskatchewan, we believe as part of our purpose, we're here to support a thriving Saskatchewan, and we're here to support entrepreneurs. And startup tech companies are entrepreneurs, and there's a huge need, and that capital isn't flowing. So we believe we can support with that because we're committed to helping entrepreneurship and that growth in our economy.
And what is the tech sector like there? Is there a focus for it, or is it fairly broad?
It's fairly broad. There's definitely a need as we see these bright young founders coming to the table trying to solve some real problems, and they are here to provide solutions. So we have one founder that we're working with off street, and basically they're trying to solve parking issues, and it's a practical application, and there's a lot of value to bring to the table. So they're solving real problems and adding value.
Can you send them to Toronto, please? We could probably use that right now. And I imagine though agriculture and oil and gas and mining must be areas of their focus too, their expertise there.
Yeah, it's a huge component of our economy here in Saskatchewan. With our venture capital fund, it is focused on tech and startups. and it can be any industry. So yeah, alive and well.
And what kind of success stories are you seeing from this?
Well, definitely Off Street is one of them. We're seeing some real success. So they start up here in the prairies, but they have expanded across North America. So that would be one that I would highlight as a success story.
And where else are you looking? You're getting involved, looking at schools as well?
Yeah, we do partner with different organizations within the province and with universities as being a great place to kind of incubate some of these ideas in the ideation process. So there's a lot of cross-functional work that we do within our own province to support these founders. So the Venture Capital Fund is just one way that we get funds into the hands of these founders to take their ideation and get it market ready.
And are you seeing interest from outside of the region?
We are primarily within the prairie provinces, but we have also supported founders like from Ontario as well. So I think what's core is these founders are looking for capital to support with their ideation. So we definitely see the interest is there.
And are you getting companies like from Toronto moving out there? So maybe they see a better opportunity out there?
Yeah, I think with our founders are always looking for a good environment for which to set up their business. So the access to talent is one of them, and a reasonable environment to start up their business. And I think Saskatchewan is very much welcoming of investment and for having those founders set up shop here and contribute to the growth of our economy and to provide good paying jobs within our province. So it is an environment that is welcoming to entrepreneurs.
And what stages are you looking at when you get involved with these companies?
We are actually focused on early stage ideation. So these founders are very much so in that startup phase, and where we find that there's challenges to find capital when these ideas are trying to get market ready. So we are early stage funders.
And what do you look for? Is there a certain thing that kind of triggers it for you, or do you have set parameters?
Yeah, we have set parameters. We have a team that manages this fund, and we also have a group of advisors who look at the opportunities and work collaboratively to kind of find those gems and support those founders who are, maybe closer in that flow of ideation to market readiness, and make our decisions based on many factors. So yeah, it's a team effort to find those gems.
And how long do you end up working with them?
We work with them for quite a long time. So not only are we investors, we actually are there to support them through managing and supporting them through their business development process, because our intent is to share that knowledge of, how do you get from a startup to being a going concern, and, there to not only start, but grow and to scale. So we're quite involved to support these founders.
And what's next for the fund?
Well, we've met our target fund, and we're quite pleased about that. And now we're looking to distribute those funds and find those opportunities and get these founders off the ground and running.
Okay, Selena, thank you very much for joining us.
You're very welcome. Thank you for your time and your interest.
Selena Philpott is the CEO of Connexus Credit Union. Coming up after the break, an Australian pension manager is bringing some of its services to the Canadian market. We'll have more on that next. Australian pension manager IFM Investors is committing more of its pension capital to investing in the Canadian market, specifically infrastructure and other real assets. Now let's get more on this from Ken Luce, Executive Director at IFM Investors Canada. Ken, thank you very much for joining us.
Roger, thanks so much for having me on today.
What's the reasons behind deciding to expand the money here?
Well, actually, we've been working with Canadian institutional clients really since 2012, helping them get exposure to infrastructure assets. That business has grown, so really establishing a physical office here in Toronto was the next logical step in that growth strategy and supporting our Canadian institutional relationships here.
And what with the expansion, where are you going to be looking? What do you have now, and where will you be looking?
Yeah, so it's interesting. We have two existing assets in Canada. We invest on behalf of our clients in Enwave's Canadian District Energy business. They're world famous for their deep lake water cooling system. It's really a geothermal system that's used to heat and cool about 60 million square feet of downtown Toronto commercial space, including the building that I'm sitting in right now. And I think with 2/3 of the world's energy consumed by cities, and half of that energy used for heating and cooling, it'll play a critical role for Toronto and communities across Canada. We also invest in a seaport out in Vancouver, so really have that cross-Canada presence already.
And with your next moves, you're recognized in responsible investment directories as a manager with explicit ESG integration. I'm just reading this active stewardship. Are you going to continue to use those as your focus on decisions?
Oh, I think certainly as a long-term pension-owned investor, we really think in not just quarters and years ahead, but we think decades ahead. So really throughout our infrastructure portfolio, whether it's Canadian assets or global assets, we are targeting net zero by the year 2050. We have interim 2030 goals. So really thinking about sustainable investment is really a key risk factor for us, but something that is embedded within our investment process.
And so it's long term. You're here. What makes Canada so appealing for a long term investor from your point of view?
Oh, I think that it's really appealing. And if you think about our pension owners, so we're owned by 15 Australian pension funds as well as one UK-based pension fund. Australia, the pension market is expected to be the second largest pension market in the world by the year 2035. So we really have the backing of the Australian pension market, and those owners alongside our global clients across the world really see a lot of attraction towards investing in Canada. It's a highly aligned, really mature market, but at the same time presents a lot of opportunities across some of our core infrastructure areas, including transportation assets, utilities, as well as energy assets. So certainly see a lot of opportunities to invest here locally.
Now, some have viewed you as being a little conservative and occasionally expensive on valuation. Are you going to try and mix a little more and change it up a little bit, or is this the track that you're on and you're happy to stay on it?
Oh, I think this is a track that we've been on for a number of years now. We'll continue to stay on this track and certainly see opportunities really across different subsectors. We see some really exciting opportunities right now in energy markets, such as renewable natural gas, where valuations are, in our mind, quite attractive, given really significant supply-demand imbalances. It's a new emerging infrastructure subsector here in Canada, but something that we have a lot of experience with, given we've been investing in infrastructure for the better part of 30 years now.
And is that tying in with AI, and where are your thoughts on AI?
I think the tie into AI is really around the infrastructure sector, specifically data centers. There, we have multiple years of experience really building out data centers, primarily in the United States as well as Europe. But at the same time, really thinking about putting those protections in place for investors. I think with the AI revolution, we really need to focus on strong counterparties and long-term contracts to mitigate some of those downside protection challenges.
And just one last question was with Canadian investors, where do they fit in this for you?
They fit in very squarely as part of our strategy. So we work with over 200 Canadian institutional clients, and they've been really advanced in terms of their approach towards infrastructure. Many of the mid and small-sized institutions in Canada follow their larger peers into the infrastructure asset class, years and years ahead of many other regions like the United States, by and large. And I think as a result, it's become a very sophisticated and very significant portion of the infrastructure market globally. So they'll play a key part in our strategy, and we'll look to continue to partner closely with those Canadian institutions.
Okay, Ken, thank you very much for joining us today.
Super. Thanks for having me on.
Ken Luce is Executive Director at IFM Investors Canada. Still ahead, we'll hear from Thomas Seal about the blockbuster merger of Teck Resources and Anglo American after shareholders voted in favor of combining the companies. Stay with us. The blockbuster takeover of Canadian copper miner Teck Resources by London-based Anglo American passed a key hurdle Tuesday after both companies' shareholders strongly is an understatement, backed the $50 billion U.S. deal. For the details, we're joined now by Thomas Seal, Bloomberg Vancouver's bureau chief. And Thomas, thanks very much for joining us.
Hi, nice to be here.
How did things unfold with the meetings? Fairly smooth? Any acrimony?
It was a remarkably low-key affair. I was here in Vancouver at the Teck shareholder meeting, and I was the only journalist present, and the vote passed, as you say, very strongly. The proxy vote in favor of the deal was about 89%. We already knew that the super shareholders, that is the Keevil family and some other parties, had already endorsed the deal. So we were waiting on that B class, whose shares are weaker, just to see, if there was any surprises, but no, both companies' shareholders endorsed the deal within about 10, 15 minutes of each other.
Now, there's still some things to clear, but what is the significance of Teck for Canada, and what does this mean, this merger or takeover, depending on who you talk to?
Yes, they portrayed it as a merger of equals. Anglo-American's value is greater, and there are some aspects which would make it fair to call it a takeover. For instance, it's going to remain, at this point, it looks like it's going to remain domiciled in London, UK, not Ontario. The significance in Canada would be a few things. The companies have made a lot of commitments to Canada to help, I guess, smooth the path of the deal with those key shareholders, the Keevils, who are Canadians and have rejected previous takeover approaches, as well as the Canadian government, who are still reviewing the deal for its benefits to Canada. They've committed to have an HQ in Vancouver, so that would be sort of moving it from London, effectively. that's one commitment. Another one is 4.5 billion Canadian dollars over 5 years investing in Canada. Teck has a big, important smelter here in British Columbia in Trail, which has been here for many decades, and could prove quite important for sort of critical mineral strategy. As well as that, Vancouver is obviously a mining town. It had its own stock exchange. It's still a hub of junior miners and mining speculators. And so I think, BC's Premier David Eby was really pleased with the announcement, a very pro-business take from a Premier that doesn't always get on very well with business. I think there's this hope that it could maybe rejuvenate Vancouver as a mining hub.
And are there any guarantees on how long the headquarters will stay there, or any promises on that?
So the companies have said in perpetuity. That's the wording they've used, if I remember correctly. I think the Canadian government, from our reporting, is pushing for something even meatier. So maybe more executive functions, permanently based out here. I think the commitments the companies have made so far would include, the CEO, the CFO, other functions to be based in Vancouver. Now, obviously, these people are flying in between many places, and so I think there's some skepticism or some worry that this could be a paper commitment and not a reality. So there's definitely close review being put on that from the Canadian government.
Yeah, and the government could nix us, though. What's it looking like for that?
So obviously, it's a bit of a black box. It's a investment screening process which was strengthened by the Canadian government last year. I think it would be more of a surprise if it was blocked. This is a government that's quite pro-business since Mark Carney took over. He wants, critical minerals to be a main plank of how he's going to fund various commitments he's made. He said in an interview to CNN in June that that's how he's going to fund the massive increase in defense spending, for instance, critical minerals. So, it would be, they would have some explaining to do if they completely block the deal, I suppose. We're waiting for more on that in the coming months.
And I saw a bit on the article about South Africa not happy with this decision. Could that be any factor in this at all?
Yeah, I think that would be one of the smaller antitrust or national security reviews related to this deal. I'll confess up front, I'm not familiar with the South African government review process for this. But deals of this scale often need to go through reviews in a whole host of countries. I believe for this deal it's 8 or it's somewhere in that region. So Canada, the UK, and obviously South Africa, another global mining hub. But I think the Canadian one is seen as a key hurdle because the company would be based here as a headquarters.
Okay, Thomas, thank you for that update. Appreciate it.
Thank you.
Bloomberg's Thomas Seal. Well, 3 government ministers were present to announce a nearly $3 million investment in military satellites built and operated in Canada to surveil the Arctic and warn against foreign threats, all part of the North American air defense. CTV's Judy Trin has more.
These are not just defense assets, they are nation-building assets.
3 federal ministers present to announce a nearly $3 million investment in military satellites built and operated in Canada to surveil the Arctic and warn against foreign threats as part of North American air defense.
It will be operated here from Canada by Canadians, so it really is a sovereign capability.
It's sovereignty that continues to be challenged as Donald Trump pulls back support of Western allies in the administration's newly released national security strategy.
And what the United States of America chooses to do through its national security strategy is its choice. What we intend to do here with a new Canadian national security strategy is our choice. So we will continue to manage the relationship well.
The White House document calls for the U.S. to restore American preeminence in the Western Hemisphere and demands other nations make the U.S. its partner of choice while discouraging collaboration with others.
It's a kind of coercive economic nationalism.
Canada's former ambassador to NATO says the strategy could be viewed as hostile, that it lumps Canada in with Latin America, positioning it as a vassal state existing only to further American interests.
Focuses on buy American. We're going to push out competitors out of your markets because we're going to be the preeminent power in the region.
The Trump doctrine seeks to weaken China. It also calls for Europe to stand on its own 2 feet and is against NATO expansion. The Kremlin says the American strategy aligns with Russian policy.
And that was CTV's Judy Train. Well, our colleagues at Bloomberg Intelligence say the FOMC is widely expected to cut the Fed rate by 25 basis points at its December meeting that's happening today. But the surprise may come from how dovish or hawkish their guidance is. All eyes will be on that in just moments. BNN Bloomberg will take the Fed's announcement live once it gets started at 2 p.m. Eastern. And that wraps up this edition of Trading Day. I'm Roger Peterson. Thank you very much for joining us. Have a great day.